Hello and welcome. My name is Michael Sealey and I'm a Senior Manager in the Global IFRS Desk based here in London. Joining me today is Steinar Kvifte, who is a partner in the Nordic IFRS Desk and also a member of the Global IFRS team, where he is the Chair of the Presentation and Disclosure SMG. As many of you will be aware, the ISB released an exposure draft entitled General Presentation and Disclosure on December 17. Today we will discuss the exposure draft, which proposes to replace IAS 1 with a new standard which will prescribe new presentation and disclosure requirements. Steinar, why is the ISB proposing changes to the primary financial statements and why now?
Pretty good question actually, because the issue of presentation and disclosure has not really been that much in the headlines over time. If you go back to the early days of globalization, the real globalization of IFRS, and then I'm thinking of 2005 and the years thereafter, it was all about getting the numbers right. That meaning recognition and measurement. But over time, complaints started to arise around, in the beginning, pretty much around too much disclosures. It was typically referred to as disclosure overload. And then in 2013, the ISB organized a public forum where they raised this issue, and they referred to it as the disclosure initiative. At the time, as I mentioned, it was much about there were too much disclosures, too much boilerplate disclosures and the like. But then over time, as this project developed, it became more about communication and not so much only about disclosures. And that's where the primary financial statements project comes in, because presentation is also about communication. And I think the overall, by now, the better communication theme is not only about disclosure overload. It's about, as I mentioned, the more entity-specific tailored type of disclosures, and it's also about communicating performance measures that are not necessarily IFRS, so-called non-GAAP measures, or alternative performance measures. So that's where we are today, and that's why the release of the exposure draft just before Christmas is such an important event, because that gives us a good indicator of where the ISB is going.
That's very interesting, Steinar. So what is the output of the Better Communication project?
Yeah, well, there's actually been quite a few outputs so far. As I mentioned, formally the whole thing started in January 2013 with this forum. Since then, we've had a few narrow scope amendments to specific standards. We've had amendments to IAS 1, we've had amendments to IAS 7 on the cash flow statement, specifically dealing with disclosures allowing a reader of financials to understand the changes of the financial debt in the balance sheet in reference to cash flow movements. We also had the release of the practice statement 2 on making materiality judgments, because the ISB has realized that to a great extent, better communication involves the application of the materiality threshold. So what they've released in 2017 was a practice statement trying to guide entities, companies, in applying the materiality threshold in a way such that we get rid of all the immaterial, i.e. irrelevant information, and focus on the relevant, i.e. the material information. And then we've had, in that context, we've also had some refining of the definition of material. And currently they're working on the management commentary, practice statement 1, realizing that better communication is not only about the financial statements, it's also about how the financial statements integrate with other corporate reporting. And that's a very challenging aspect of it, obviously. So it's very exciting to see where we end up on that one. And then, of course, we have the primary financial statements that we're discussing today.
Well, it certainly seems like there's a lot of change in the wind. Well, we don't have time to go through all the details of the ED today, Steinar. Could you provide the key proposals which the ED proposes?
Yeah, I find it quite helpful to kind of categorize the proposed amendments into two categories. So one of them deals with comparability, in the sense that the ISB is proposing to remove some of the flexibility or the optionality that's in current GAAP to allow for more comparability across entities. So that would be one of the categories, or one of the types of amendments they're proposing, and the other one would be quite the opposite, because they're also proposing to include requirements that would request entities to actually provide entity-specific and tailored information. So those are the two kind of categories. And to just give an example or a few examples, in the first category, when we talk about those standardizing type of amendments, I would say, for instance, prohibiting the column approach in the P&L, which is one of the proposals, is tend to kind of standardize the way the primary financial statements look. They're proposing to get rid of some of the practices we see in some industries where entities would have a kind of a mix of by function and by nature analysis of expenses. And also for the cash flow statement, they're proposing to take away some of the optionality with respect to how you classify interest and dividends, for instance. So those are examples of where they want to standardize practice. But then on the other hand, they are also proposing to require disclosure of unusual items. And unusual items are obviously very entity-specific. And the ISB is proposing that entities should disclose these types of items in order to allow the reader to understand what is expected to be recurring and what is non-recurring. And also management performance measures, or what we refer to traditionally as alternative performance measures or non-GAAP measures. They're proposing that entities should disclose what type of MPMs that entity is actually using and why, and reconciliations and so on. So I think those are some of the main proposals.
Steinar, you mentioned the structure of the Statement of Financial Performance, and I notice a number of the items are now going to be defined under the new proposed standard. However, companies have been using operating profit for many years now. Why is there now the need to define items such as operating profit as subtotals?
Well, yeah, you're right, Mike. Operating profit is a non-GAAP measure as of today. It's not defined by IS1. You have some discussion of it in the basis for conclusions to the current standard, but that's it. And but still, in pretty much all jurisdictions and also pretty much across industries, operating profit is a measure that is commonly used by entities. Now, what the ISB is trying to do is to define it in order to allow for more comparability, because that's really the issue, that as long as something is not defined, and this is a very, as I mentioned, common measure, if it's as it is currently defined differently by different entities, the users look at measures that apparently are exactly the same, but then they're not. And that's a concern. So the ISB is trying to define it to allow for more comparability.
I notice there are a number of other defined subtotals coming up. Can you tell us about some of those, please?
Yeah, because what the ISB is proposing is not only to introduce new subtotals. What they're doing is they're also actually sectionizing the income statement similarly to what they do in the cash flow statement, or that we already have under IS7. So they're introducing three primary sections of the income statement, being the operating section, the investing section, and the financing section. Although they're also clarifying and emphasizing that those sections, although they are named and look the same as in the cash flow statement, they are not intended to be exactly the same. But then they run into some issues, because when they deal with the share of profit from associates and joint ventures, they find that that share of profit doesn't really fit in with directly in any of those sections. So they end up in the proposed standard, they end up suggesting that the share of profit from integral associates and joint ventures is a separate section. So that comes between the operating section and the investing section, while the share of profit from non-integral associates and joint ventures end up in the investing section. And then you might ask, what is an integral associate and what is a non-integral? And they obviously they're defining that, trying to define it. And to a great extent, I think currently in the current GAAP in practice, we often refer to core associates and joint ventures and non-core associates and joint ventures. So the integral, non-integral concept is somewhat similar. The difference, of course, is that currently in practice we find that many include integral or core type of associates and joint ventures in the operating section. That wouldn't be acceptable under the proposed standard. And others include both integral and non-integral in the below operating section, which also would not work under the proposed standard. So this is actually quite a significant change. So then we end up with a subtotal being operating profit. We get a subtotal being operating profit and share of profit from integral associates and joint ventures. And then we have the profit before financing and income tax. before the bottom line, which is profit or loss. So compared to the current standard and the current requirements, we are ending up with sections and with more mandatory subtotals than we have currently. Also, what this effectively does is that we replace what today is considered APMs or MPMs with IFRS measures.
Thanks, Steinar. It certainly seems like there are a number of changes ahead for the accounting function. Well, that about wraps up today's video. I'd like to remind you that the comments for the exposure draft are due by 30th of June 2020. So if you have any comments, please send them to the ISB by that date. I'd like to remind you of our 2 applying IFRS on this topic. The first is enhancing communication effectiveness, and the second is alternative performance measures. We've also recently released an IFRS developments specifically on this exposure draft. Please look out for those on our website. Please be aware that we're also presenting a webcast on March 24, which will provide further details of the exposure draft. So keep an eye out for that in your inbox in the near future. Thanks for joining us. Farewell till next time.